Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, and as per the title of this video, I'm going to be looking at why there seems to be a potential one more leg down, and I'll have a look at the exact price it can come back down to. I'll also be having a look at the wider markets and the impact on those markets from the CPI data that we got on Wednesday. And as per usual, I'll have a look at the 60-day cycle to ascertain exactly where we are and when we'll be starting the new 60-day cycle. So if that sounds interesting, drop everything, get yourself a cup of tea, sit yourself down, eyes on the screen. Let's get cracking. And as per usual, before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. We'll start off with the inflation data that came out on Wednesday. So to get everybody on the same page, this was the October figure at 3.2. And what was expected, the consensus for December was 3.1. And we came in exactly at 3.1. So the figures were as expected. But what was more important was the comments that were going to be made by the Fed chairman, Mr. Powell. So as you can see here, with those figures, the Fed kept the interest rates unchanged, and they're giving a signal that there could possibly be 3 rate cuts next year. Obviously, that has a positive impact on the markets going forward. So we could expect 2024 to be a really good year for the markets in general and hopefully for Bitcoin in particular. And if we scroll down a little bit, we can see that the Fed's message on Wednesday was strongly suggesting that it is now finished with rate hikes. And the talk of the town is actually cutting rates as early as next summer. So that's the intentions. And scrolling down further, we can see confirmation of all this, that there is now a recognition that keeping rates high for too long and waiting too long to cut them could endanger the economy. So you can see there is a fear that's now gripping the Federal Reserve, and they're aware of the risk of hanging on too long. And as you can see, they're not wanting to make that mistake. So there you have it. So the question now is, what is the impact that that's going to have on the wider markets, including Bitcoin? On the SPX, we can see that on Wednesday, this green Marubozu candle here obviously went up in anticipation and as a result of Mr. Powell's comments. And yesterday we had a little bit of a pause. So does this mean it's going to come back down, or will it keep going up? It could quite conceivably have a retest of this level here, which we marked out previously in terms of the resistance that we've had historically at this level, going back quite a number of years. So I would expect 2024, if we do get the rate cuts as well, this would obviously help the SPX go much further up. Looking at the Dow Jones index one more time, we got another Marubozu candle on Wednesday, and it progressed further yesterday as well. So obviously it's having a positive impact on the Dow Jones. We're coming up to a resistance point over here, so we could get a pullback, and that's based on the previous historical context on this very strong support line and resistance points all along here. So we had resistance all along there, we had support all along here, and currently we're coming up to the resistance point. So we're just breaching it, as you can see there. So it has to make up its mind whether it wants to continue to the upside or have some sort of a pullback. But certainly looking quite bullish at the moment, and 2024 has much better prospects. And looking onto the dollar, we can see that last week when I showed you this with the green candle, that we could quite easily come back and bounce from this level here. So we are now at the support level. So it is conceivable that we could get a bounce to the upside, which means that the wider markets could have a little bit of a pullback, including Bitcoin. But I would expect this trajectory to the downside to continue further. And I would expect the next support to be at this level here, at exactly 99. So let's see what happens, but certainly the dollar and all the wider markets are playing out as per expected. Okay, so what happened to Bitcoin? So this is the Wednesday candle. As we can see, that this long wick at the bottom here, that buyers came in and pushed the market up, creating this hammer candle. And if we have a look at the hourly chart, at this point here, this is where the market was when the CPI data came in. So you can see quite clearly the impact of the CPI data pushed the market up for Bitcoin all the way up to about 43.4 thousand. And this candle here is when Mr. Powell started speaking and became very dovish, and it pushed the market to this level from that point. So since then, we've just been going sideways. So the question is exactly what could possibly happen here. And as I mentioned in last week's video, and the question is what is possibly going to happen going forward from here. And as you know from my last video, I gave you 3 targets. One was down here, which is where we are, which is around about the 40,000 level. And then I gave you the 38,000 at the top of these wicks and 35,000 at the bottom of these candles here. So the question is, how do I see this playing out going forward? So the first thing to notice on the simple moving averages on the daily time frame, that the 21, this yellow line, the 50 white line, the 100 red line, and the green 200, they're all lining up. So you can see this is really quite bullish. It's all untangled itself down here and now are in line to really go much forward. So this is what you want in a bull market. They're all lining up from the 20, 50, 100 and 200. And so far from the bottom here at around about 26,000, what we've really got is a retest several times of the 21. And we've just come back and just done exactly that. And the question is, will we come back to retest that, or will we fall down to the white line, which is exactly at 38,000, which is our next target down here? The way I see this is that having come back down to this level here at 40,150, around there, and we've had a little bit of a bounce. And the thing is that we've bounced right into the 61.8 over here. So if we do a Fibonacci retracement from the top here to the bottom, you can see we came right up to the 61.8 3 times now in a row. And we're creating lower highs along the way. So this to me is a sign that this is a ABC correction to the downside. So what that really means is that we've created a high at 45, couldn't get above it here, made a lower high, made another attempt here, still created a lower high, and now we've made another lower high here. And what we can do, we can put a trend line over here. That gives you some sort of a resistance along the way. And if we do a 1-to-1 extension from the top at 45 down to this level here, this extension from this point where we've just come up to the 61.8 takes us all the way down to that 38,000 mark. So it makes sense, just from a chart's point of view, to come back and retest this level here at around 38,000. So this is where I'm thinking, and I think what that will do is to shake out some of the weak hands, the retailers in the market who got caught up with all this euphoria up here. So this shakeout down to the 38 will mean that a lot of the weak hands will get out of the market, and the institutions will more than likely pick those up before we continue into the new year until the ETFs are announced in the 1st or 2nd week of January. So that's how I see that. Obviously, that's not a reason to sell because this may not happen, but there is a likelihood that this is a good level for the price to come back down. And in the background of all that, we have the bullish conditions, which is the supply has been falling for many months. The number of people holding their Bitcoins rather than selling has been increasing, and the demand because of the ETF potential in January means that there are more and more people wanting to get on board. So going into the new year, I would expect a very quick shakeout if it's going to come, and then a move to the upside. And the levels to look out for on the upside, there are really 2 levels I would be going for going into the new year. The first is this level here at 46 to 48,000. So if we draw a line over here, we can see that this is going to be a resistance point here. And just above that, we've got the pi cycle, which has been our second main target. Our first one being the yellow line here, which we've met now. So we are having some sort of a correction. So the RSI MTF line is proving quite a resistant point here. And if you look at the green line of the pi cycle, the 111 simple moving average, you can see that's exactly at 38,000. So it would make sense for the price to come back down, as we've seen that it's finding support along this green line as well. And our pi cycle target is at 56,000 currently. So it is quite conceivable to see this go up to the 56,000 into the ETF potential announcement. So these are the 2 levels that are left now on the upside. The 46,000 to 48,000 here, and the 56,000 for the pi cycle. We know why the pi cycle target is there, as I've shown you numerous times now in all of my videos previously, that in all the 3 cycles before the halving, the Bitcoin price has always come and tested the red line here. And that currently is at 56,000. So I think we should all just fasten our seatbelts, but hold on. For me, there is no need to take any action whatsoever. I'm a long-term holder, and in these markets, doing nothing is actually very profitable. With a strong trend like this, I would expect it to continue rather than to come to the downside. Yes, we're going to have corrections along the way, and we might have a minor one here down to 38, or even our next target at 35. But I would expect a bounce from 38 towards the 46, 48 mark before moving on to the pi cycle, wherever that's going to be, and I would expect that before the halving. So we've got two main events coming up. The ETF applications, we should get the green light in the first or the second week of January, and then we've got the halving. Okay, so moving on to the 60-day cycle to see exactly what that's telling us in terms of the future direction of the Bitcoin price. So we bottomed out here in the previous cycle here at 51 days, and since then we're currently on 64 days. And as mentioned previously, as we're coming up to the 60-day cycle low here, we would have expected a fall into the 60-day cycle low, and it's exactly what's happened here. And the question is, have we bottomed out? And as for reasons I've just given you, it may well be we have another leg to go down to the 38 before we bottom out here. So this could be a 65, 70, 75-day cycle. We'll just have to wait for the signs at the moment. But one sign that would confirm that this was the bottom exactly on 60 days would be a move above the 45,000, and a daily close above the 45 would confirm the bottom of the 60-day cycle here. But if we do fall back in this 38 zone here, then we'll have to wait for the developments of what happens down here before there is a move to the upside. So there'll have to be levels here which would then confirm the bottom of the 60-day cycle. So in essence, it's just a waiting game, it's a patience game. And the reason why this is important to us here at Wisdom Bites is that we have a private member section where we do swing trades, and we use these 60-day cycles just like over here, to actually get into swing trades with the Bitcoin miners. And for those people who are interested in our swing trades, and I know many of you are, we've just completed round 4, as you can see here. So we came to the end of the 60-day cycle. That's the time when we have to take profits and then await for the start of a new 60-day cycle. So this is what we're going to do in the next few days or in the next couple of weeks, whenever the market bottoms out on the 60-day cycle. These were the round 4 trades with Marathon, Cypher, TerraWolf, then we got back into Marathon and Cypher here. And the overall result was 7.5%, 33%, minus 5%, 57%, and 8%. So this 57% was really 2 trades, getting out of 50% of the position at around about 12.50 and the final position at 15.40. And the overall average profit was 57% here on this particular trade with Marathon. So once the 60-day cycle bottoms out and the new cycle starts, we'll be getting into round 5 for the next set of the swing trades. And that's with the Bitcoin miners. And many people ask us exactly what we do in the private member section. Well, just to share with you our objectives there. And what we really have is that we're covering the 4-year cycle. And during that, I'm talking about my long-term portfolio, so I'm sharing my view on the various assets that I hold on the long-term portfolio for the duration of the 4-year cycle. But along that 4-year cycle, we've got 2 more years to go, and along that journey, I'm trying to add to that long-term portfolio by using the ratios method and the swing trades that I've just explained to you. So these 2 methods here basically go and feed into the long-term portfolio, which has now grown by over 60% over the course of this year, which otherwise I would have just left alone to grow until the end of the bull market. And if you're wondering what we cover there, we do similar things to here in terms of the Bitcoin analysis, and then we look at the 60-day cycles in more detail for the swing trades. We track the portfolio, sorry about this, MTC should be BTC, Bitcoin miners, and we've divided the Bitcoin miners, which are about 20 of them, into 3 tiers: the safest tier, the medium safe tier, and the high risk, high reward tier. So these are the main things we look at to keep our focus for the next 2-year journey towards the end of the bull market. So currently we're waiting for the end of the 60-day cycle and the beginning of the next one to identify the next set of swing trades. And the reason why I'm so interested in the Bitcoin miners and why I'm fully invested in the Bitcoin miners rather than Bitcoin or Ethereum or in the altcoins, the reasoning is basically this. When we bottomed out in the COVID situation in March 2020, if you take the bottom from there, around about 3,800 to the 69,000, Bitcoin went up by 16x. And if you compare that with some of the Bitcoin miners in the same period, from March 2020 to the end of the bull market in November 2021, Marathon actually had 232x, Riot 155x, Argo 130x, Hive was 89, Bitfarm was 46, CleanSpark was 43, and Hut was 43x. So while nobody can guarantee that these are going to be the same figures for the next bull run here, what we can say is that because the Bitcoin miners are a leverage play, you can expect them to outperform Bitcoin. And this is my narrative. Nobody can guarantee the future. Nobody knows the future. All we can do is go by past performance and project forward. And if you want to join the private member section, all you have to do is click the join button here, and for the price of a coffee per week at £12.99, you'll have access to all the previous videos, all our swing trades, and regular market updates on a daily basis. Please remember, you can cancel at any time. There are no contracts, there's no obligation, and I know some people just join to get the swing trades and then they cancel next time, and that's absolutely fine by me. And currently there are just 7 more spaces left, after which you'd have to wait to join if somebody cancels. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, then leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.